Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual, at this time of year, I will stop looking at my daily charts and instead concentrate on the longer term view, using my monthly, even yearly charts to commentate on a market. If you would like to discuss any of these, I'll only be happy to hear from you. So let me now introduce today's longer term chart. Today I'll be looking longer term at Euro Sterling. I would like to start by reprising for a third consecutive year now my opening from the end of 2020, as it's still relevant, and I quote, "The first thing to note here is that despite the very large range in 2020, we still had neither an annual key reversal nor a lesser annual outside year. On a fractal basis, we did have monthly key reversals up in February and also September, but nothing for the year. The move up during 2020 comes as a disappointment to those who followed the 2019 annual key reversal up." End of quote. The point of regurgitating that, yet again, was to show how much this market has been firstly moving lower throughout 2021, and then how the range of 2020 between 8280 and 9500 still influences this market, even though it has been extended a little on the downside in 2022. This has now been going on for 4 years. Despite this captive range, there were two features in 2021 that still require discussion even now in 2024. I brought these up last year and I quote, "The first is the ragged bow tie formation made in July from the then declining 1-year moving average, currently at 86.65, the 2-year moving average, currently 86.25, and the 5-year moving average, currently 86.84. Now, this bow tie is not perfect, but interestingly, it looks like the moving averages went in and out of the bow tie in the right order. Hence, using July 2021 as a base, we saw an initial move in the direction of the moving averages, that is lower. The second significant part is the idea that we should see the start of some sort of move between 15 to 20 months after the crossover. That meant between the end of October 2022 and March 2023. I know it's a wide area of time, but that is what this bow tie formation demanded. Well, the low was formed earlier in March last year, and we did have a pipe bottom in July and August 2022 that led to the explosive move higher in the summer. However, since then, the next major move was last month's, that is December 2022. Last month's monthly key reversal up. And it's way too early to call that the start of something." End of quote. Since those moves, we saw a rise in early 2023 that petered out at the recent 61.8% Fibonacci line at 90.03 and a move back down into the moving averages, down to the interesting 38.2% Fibonacci line and the significant 2006 to 2008 move at 85.52. This all leads me to the final point I wish to discuss, so I'm going to raise now for 3 consecutive years. I would like to echo the following from my commentary of each of those years when looking at a downside, and I quote, "Of course, it is completely pointless unless we can break the key 50% Fibonacci line of 2006-2008 move at 81.66. And that is the end of the quote. That is true today, this year, 2024, as it was in 2023, 2022, 2021, and 2019. The complex crown top cannot reach its full potential unless the key 81.66 level is broken. Not breached, you understand? No, not breached, but broken, and properly broken. That doesn't seem to be currently viable as we look at 2024 with so many indecisive monthly spinning tops and doji crosses behind us, and also in front of us. Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.